Hey, it's Clay at claytrader.com, and I want to talk about a skill that I truly do believe matters most to day traders and swing traders and investors. And I want you to know up front, this is not going to be me sitting here talking in theory the entire time. I'm just going to set up some context, but then I'm actually going to be using some of my personal real life day trading results to illustrate this exact concept and why this skill is so important, and how if you don't use this skill, things can get, I was going to say a bit ugly, but actually very, very ugly. So let's just hop right into it and let me set up some context here. So you're going to see what happens here from a real life perspective. But like I said, to build some context, I was looking at this stock, and in my mind, I thought, you know what? The price is going to go down. That's what it had been doing, clear downtrend. So in my mind, thought things would be going back down. So I was looking to go short the stock. Now, if you're a beginner day trader, all going short means is that I want to see prices go down, because that means I will make money. So if you ever heard the term going short, shorting, oh, it's the shorts, any sort of variation of that, all that is saying is those people want to see prices go down and they will make money, which is totally crazy the first time you hear it. I remember the first time I heard it, like, wait, what? I thought prices need to go up. Nope, you can make money and prices go down. But on the flip side of that, if prices go up, then that is bad. Prices going up means you are losing money. That's not a good situation. So that's the context going in. Again, I thought that things looked great. I thought that the price wanted to go back down. So let's actually see how this all played out. All right, what I'm going to do here is hop in at, 381. If it looks like it wants to come down to 381, with my risk being 383. So $2 risk 50 shares, that's $100. So I'm going to risk $100 here. And if I'm wrong, I'll still be green on the day, which I'm fine with. So let's see if this thing wants to come back down. Would like to see it down to at least 378. Whoops. Well, so this thing's either going to bounce up through and I'm out, it's not looking so good for me right now. Well, let's see if it does want to come back down. Watching 383. Yeah, not looking good. Got to be out. How am I not out? What did I do wrong here? 384, I want out. Oh, wait, I got to buy. Whoops. Did I just luck out there? I'm short, I got to buy. Let me give this thing a little bit more wiggle room now. If it goes up over 383.50 though, I am going to back out. Okay, out there for, yeah, a little bit more than the $100. We'll call it $130-ish dollars. So as you saw, didn't work out and ended up having to take the loss. And just to map things out very quickly to continue to build context here, I got short at 31.18. I covered at 383. 381.18 is where I got short. I think I might have said that wrong. I got out at 383.80, which equated to, unfortunately, had to put the red thing there because it was a $130.95 loss. But we're not quite to the skill yet that matters most, in the sense of why it matters most. So yes, the skill that matters most is risk management. Take the loss. I understand in this day and age, diamond hands, strong hands, YOLO, go big or go home, depending on where you kind of hang out in the internet, especially with the diamond hands. I understand. I get it. It seems to be a mentality of if you're taking losses, then you're just not trying. If you're taking losses, then you just don't have enough faith. And I get all that. But remember, if you want to be a day trader, losses, and any sort of trader, swing trader, investor, losses happen. Nobody's ever going to be perfect. And this is why the skill matters most, because, well, you're going to see that what I was up 167 looks pretty good compared to what happens next. Now, to make these calculations a little easier, I want to make a couple assumptions. Let's just say, for example's sake, that I got in at 381 and then I got out at 384. So right there, like I said, 384, 381, that just keeps the math a little bit easier. So let's just call it, the $150 loss. Now, it obviously wasn't $150, but just to keep the math easy, because it was actually only 130, but let's just say that I took a $150 loss on it. So just keep that in mind. Again, my entrance was at 381 and my exit was at 384 for, we'll call it $150 loss. But what actually happened next? Let's see how this all played out. So I'm just going to walk you through what happened next looking at the chart here. So again, got in at 381 and then exit at 384. But let's just say that I didn't use the skill of risk management, of discipline, of having a plan, of understanding position size to know that, all right, this is where I logically need to get out, because if it goes by here, then things are going to get very sketchy. But at the core, the skill of risk management, the skill of admitting defeat, the skill of being able to put your ego into the closet and say, you know what, I'm not always going to be right. And if I'm wrong, I need to admit that I'm wrong and then just get out and cut the loss. Whatever you want to call that skill, again, the simple way, risk management, then call it whatever you will. But the fact is, yeah, I didn't have diamond hands and I ended up taking the loss on it for the $150. But let's see what happened next. Okay, well, kept going up. Let's see what happened next. Kept going up. Remember, I got out at 384. But what happens if I was still holding? What happens if I got stubborn? What happens if I had diamond hands? What happens if I had an ego? Refused to admit that I was wrong. No. It'll come back down. No. The last time I honored my stop loss, the last time I did risk management, the price ultimately went in my favor and I would have made money. So some sort of justification mechanism you're using. But at the core, you're not using the skill that matters most of risk management, cutting the loss. Well, now this thing is up to 392. Look at that. All right, maybe you think it's going to come back down. Okay, going up more. And then look at that. Not good. And then we'll go with one more. And there it goes, which hit a high of right there at 300, and let's just call it $98. So let's just play the math game. So 398, meaning every dollar that it won against me, because I had 50 shares, I would be losing $50. So let's just say, you know what? No, let's get out at 392. Okay, well, 392 minus my entry point of 381 is $11 multiplied by 50. That's a $550 loss. And if you don't remember, I was up basically $300 going into the trade. So let's think about this. And again, this is only getting out with an exit right up here at 392. But at 392, my losses are $550, meaning not only did I wipe away all of my gains on the day, but I would now be in a hole, $250, right? Which is crazy to go from in the green to now being down $250. But again, that's not even the worst case. Let's say that, no. I think it'll come back down. And, I'm not going to take the worst case scenario at 398, but let's just say somewhere right up here around, let's call it 396, which is more than realistic, because I could see that big candle be like, okay, fine, I got to just get out. This is too painful. What is going on? So that's up there at 396. So again, let's run through the calculation again. 396 minus, if only I knew how to use a calculator. 396 minus the 381, that's a $15 loss multiplied by 50 shares. That's now a $750 loss. So in other words, because I was up 300 already, I would have not only wiped away the $300, but still had and been $450 in the hole. And think about it, that's $15 per share. Had I had bigger position size, like sometimes I do, up to 300, 400, 500 shares, that loss is extremely scary looking. But the point here being is that none of that happened. Why did none of that happen? Because you know what? It was not fun. It was not pleasant to say, you know what? I got to get out right here. It's looking like it was a great setup. It did start to go in my favor, but then it just came back up. And you know what, Clay? It's looking like you just went to the well one too many times, and you don't want to sit around and play games. So you know what? Put the ego aside. Just suck it up. Be a real trader and take the loss. Cut it. And I'll tell you what, movements like this sure do make things feel great. Talk about a good feeling loss. Now, of course, no loss feels like great, but you get it. You understand what I'm saying is the loss that I took compared to this potential train wreck of a loss feels absolutely fantastic. So at the core, the skill that 100%, and I'm not going to even ask you to trust me that this skill matters the most. I could be a total stranger to you. Totally fine. I understand. But what I would ask for you to do is, like I said, don't even believe me, but go find somebody that you do believe. Go find somebody that you do respect as a trader and that you believe to be successful, that you believe to know what they're doing, and say, hey, does risk management matter? Is risk management ultimately the most important thing? And they're going to say, yeah, absolutely. Because anybody can make money when prices are going, when anybody can make money, right? A blind monkey can get drunk. You can blindfold them, spin them around in a bunch of circles, give them a dart. They can throw a dart and it could land and they could actually make money in a stock, in a crypto, in a Forex pairing, in, any sort of futures contract. I mean, that could just randomly make money. But what about keeping the money? What about maintaining those gains? Well, that's where it becomes very difficult because most people don't want to focus on risk control. In fact, I'll guarantee you that there have been several people already that have turned off this video because I'm not sitting here talking about, well, the skill that matters most is when you hit those huge Grand Slam wins. The skill that matters most is diamond hands and going YOLO to the YOLO extent of however YOLO big can be. I don't think that made sense, but you get what I'm getting, right? A lot of people, I just want to talk about winning. I want to talk about making money. I want to talk about going big. I want to talk about making life-changing amounts of money. And I understand from a marketing, from a sales perspective, that's the easy stuff to talk about. But the true skill and the true strategy that's going to hinge and depend on whether or not you ultimately stay in the game long-term, or if you're just going to kind of be a blip on the radar, a blip in the wind, is going to be, well, how are you doing with the skill of risk management? Because if you can't maintain, if you can't hold on to the money that you've made, well, then eventually you'll give back all those gains and you're going to find yourself in a very painful situation. So that is what I would argue. And again, I'm not asking you to take my word for it. Go ask somebody that you trust, and they're going to tell you, well, yes, absolutely. At the end of the day, sure, you do need to make money because that's the idea, but you need to also be able to maintain, keep that money. You need to be able to survive the markets, and that's where the risk management comes into play. So hopefully you found this helpful, and hopefully it's just, if anything, hopefully I'm teaching you kind of through fear, because I totally disclose right now, I am trying to scare you. I'm trying to totally teach you through fear tactics to show you how bad things can get when you don't honor risk, when you don't cut the loss, because you never know when one of these situations is around the corner where the price can just keep going and going and going against you, and things can get very, very nasty. And I've been there before with the very nasty situations where the price, no, there's no way it can go any further against me. Oh, it just went even further against me. In fact, in the comment section, I mean, have you ever been there? Have you ever had a spot where the stock or the crypto or the Forex or the futures contract just keeps going and going against you, and that loss that could have been smaller becomes much, much larger? I think there's been many traders, myself included, that have been there. So hopefully you found this helpful. If you do enjoy videos like this where I take kind of general concepts and then include some of my personal trading results in them, that way we don't, it's not in theory the whole time. We bring some real world application to it. Let me know in the comment section, or, a quick, easy way to communicate that, just hit the like button. Also, check out the channel as a whole. I'm not a huge fan of people saying, hey, subscribe to my channel, and this is like the first video you've ever watched of mine. But what I will ask is, hey, if you like this video, check out other videos on the channel, and then hopefully at that point, you see enough to want to be able to subscribe to the channel, as I'd love to have you as a subscriber. But either way, like I said, if there's one thing, if there's one skill that matters most, get out there, learn to manage risk, and cut those losses. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up, as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.